please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon and welcome to Halftime Report. It's 12 noon. We're halfway through the trading session and we're staring at a fairly ugly screen. The markets have revisited their morning lows. In fact, 9960 on the Nifty. The Sensex is virtually down close to about 500 points. The fall is less when you compare it to the rest of the Asian markets. So Hang Seng is now down 1,000 points, while the Japanese markets, Nikkei, has lost close to about 4.5%. So that's the picture across the Asian markets. And you can see the cuts are far deeper. But look outside the index, the mid-cap index, Nigel, is down 2.2%, and the advanced decline ratio. After a long time, we're seeing 14 stocks in the red for one stock in the green.
That's right, Rima. And the sad part is that every time you're attempting a bit of a bounce, it's getting sold into. Just in the last half hour, you would have thought, well, we're going to hold on to that 10,000 odd mark. That quickly got sold into. So that's what's making the second half of trade very, very interesting. Remember, now we're talking about a relative outperformance, but it's the end of the week. We're closing to the end of the fiscal year as well as the end of the series. So we'll keep an eye out whether or not we can see wider cuts towards the end of trade. We'll talk more about that. First up, we're running you through all the top stories. It's a sea of red across the global market screen on the back of escalating global trade tensions. Experts, however, say that this will have a limited impact on global growth.
India tumbles along with the globe as the Nifty falls close to about 150 points. And the Nifty is below the 10,000 mark. The Sensex slips 450 points. The mid-caps take a bigger knock. The index is down nearly 2%.
And ID stocks are the only island of green in a day of deep cuts, while metal stocks take the biggest hit. Well, we're virtually at the low point of the day. The Nifty is down 150 points. Well, Anuj joins us in the studio. Anuj, we were looking at it in the morning. The 10,000 mark was going to be crucial. The 10,000 put, I was looking at that. In early morning trade, we were saying it was only unwinding very, very gradually. Now it's unbound close to around 3.5 lakh shares. So the 10,000 put was a mark that we were looking at in the morning. If those put writers, they held on, then you would believe that they're going to fight. But gradually, they're unwinding over there. Your sense, second half of trade, how you like it to pan out?
Yeah, at the risk of my neck being taken out, this is exactly the kind of the day the bulls fare the most. For one fell swoop in the morning, it would have been fine. It's like death by 1,000 cuts. It's that kind of market. And if you put it in context, we are technically at the start of expiry week because Wednesday is the expiry, right? Thursday is market holiday. And the bears have all kind of momentum. And today's intraday move, Nigel, one or two rallies being attempted, they are being sold into. So far, we've had a classical trend day. Every hour, we have made a fresh incremental low. Yes. So for intraday recovery, you will need a significant rally from here on. Otherwise, the way things are shaping up and with the kind of volumes as well, especially in the F&O side, I think the bears, after a long time, have really smelled something going for them, and they're going after it. Just a couple of points here on this global market outperformance, that we are talking about. If you compare it, say MSCI month to date or year to date, we have already underperformed a lot. So in that sense, we have had our own problems. Today, this is an added problem that we are facing. And, all sort of clarifications haven't helped. At some point, this market will, of course, become value and will bounce back. But if 10,000 was going to be a big support, then you should have seen a bigger bounce from 10,000. The first support at 10,000 should have been big, and you should have had at least a 50-60 point recovery. That hasn't happened. So for me, that is telling me that the second half could actually be a bit of an encore here, unless, of course, you start to see a big recovery in Dow futures and Europe as well. Of course, then all bets are off. But right now, it looks like a bit of a trending day on the downside.
So the next big support for the Nifty would be 9,700, where we had, bottomed out in September and October of last year.
Yes, looks like, but of course we'll not go there in one way, Rima. There will be some bounces in between, but obviously it looks like we are headed there, and that's been our call for actually some time now. Once the market effortlessly broke the 10,500 mark. Series like these normally end at the low point because, you ask the longs what would they do, and they're sitting on, real big pains right now. So, and the bears, they just need, 20-30 point bounce because they're sitting on so much money to press fresh short again. What you need now is a bit of a news flow which would scare the hell out of the bears. You know, say a 50-100 point intraday bounce all of a sudden. That would scare the weak bears. Otherwise, you know, it's a trending downward market. And as I said, if it would have been better if we started actually 3% lower, then intraday we would have recovered. Because we started 1% lower, incrementally we are keeping lower and lower levels.
Okay, thank you very much for that. Let's invite Deven Choksi and get a sense of what's happening across the dealing rooms as well. Deven, afternoon. What is the word? Are retail investors or mutual funds thrown in the towel today? Give us a sense of what's happening across the dealing rooms and the panic that we're staring at.
Good afternoon, Rima. Well, I think the volume in general is less. I think that much I can put it across. People are refraining from participating into the market. That is another thing. Many reasons get combined, I think, in such kind of a situation. Of course, I think you have the year-end situation wherein I think most of the people would conclude their trade positions. You have an early expiry of the contract for this month, I think, which is happening on coming Wednesday, and thereafter a long weekend following. So certainly, I think there is again, I think, a need to complete the transactions before the time. And all in all put together, you have got the nervous or negative news coming in from the global front, on the trade war front, etc. So all of them are resulting into refraining people participating into the market completely. As a result of which, we are seeing the lull in the volume. Though the selective counters, I must say, I think the activities are there, but otherwise, in general, I think there is a less of participation.
Right. Hi, Deven. Thanks so much for joining in. Well, in the past, you have always said that you don't believe that we're headed into a bear market territory. And you have always advised investors, well, be selective going ahead as well. What would that selection be now? Would you look to put some money into IT? Do you think that pharma stocks have corrected enough? Some of those metal stocks as well have taken a hit. Any particular sector that you would advise long-term investors to start deploying some money?
Yeah, Nigel. I mean, you pointed out in the long-term investors. I think that for long-term investors, this market is a fantastic market. Opportunity is in plenty. You have on one side, as I've been making a point here, on one side, the earning visibility for next 6 to 8 quarters. I think it is fundamentally a very strong point, according to me. Against all headwinds, I think this is a situation which we are into. So I think I would give good marks to that as a confidence for the earning prospects in the country.
Right, Deven, but where do you deploy money?
The important areas where I find important conviction is, I think, say, for example, life insurance businesses. I find that I think they are good business, available at, I think, good valuation. Growth is there. Commercial vehicle segment I've been talking about. Housing finance companies I've been talking about. And electrical goods and equipment companies been talking about. So yes, I think selectively in different pockets you get opportunity to buy into individual stocks. And individual stocks, I maintain again, individual stocks.
Deven, but what's your own call about the longer term trend for the markets? Are we headed lower? Do you see 9,700 coming on the Nifty?
Well, technically anything is possible in the market. Suppose if the sort of a capitulation takes place in the market because of the combining of too many events at one point of time, I think there could be a possibility of 9,700. How can I be rule it out? But the fact is that fundamentals are not supporting this fall. So obviously, I think would not be too much worried about the fall. Even if it is, I think there will be a buying or the recovery. Mind well, people are sitting on cash. I think the cash will come for deployment. That one thing is for sure.
I don't think DIIs or retail investors will be scared because we've already lost about 10-11% at the index level from our January peaks, and at the mid-cap end, while the index is down 15%, so many stocks have lost 20-30% from their January highs.
Nobody is scared, I must say. I think nobody is scared. On the contrary, I think people have been asking for opportunity to invest. So that is a one good sign. And that's where I think you have the real good amount of, I think, conviction that if the people are asking for buying in the falling market, it means that I think the opportunity is available as far as I think the earning outlook is concerned for the growth purpose. So select opportunities and stay invested.
Okay. All right, Deven. Thanks so much for stopping by and giving us those details. So the stage is set for long-term investors. If you're looking to deploy some money, well, this market's presenting you that kind of an opportunity. Deven doesn't believe that anyone is scared. It could be a sign of nervousness. No. And just a quick point then. The Nifty, yes, it's below that 10,000 odd mark. Remember, everyone was making merry at around 11,100. But at that point of time, the Nifty was trading at around 19.1 times. Post this correction, the Nifty is trading at around 16.9 times odd. So just keep an eye out on that mark. Going ahead, the valuations at some point of time, they'll get very, very attractive. But in today's trading session, we are seeing selling because select stocks, particularly in the last few minutes, if you pull up the intraday chart of Tata Steel, TCS, both those two stocks have moved to the low point of the day. But there are plenty of stocks that are moving around from the broader market. So let's get straight to our movers and shakers segment then. We told you first, and now it's official. Tata Steel has said today that it's been identified as a successful resolution applicant for Bhushan Steel. That's by a committee of creditors. That was in a meeting that was held yesterday. Now, the deal is still subject to various approvals, like the approval from the NCLT, as well as Competition Commission of India. Ritu Singh, who broke that story for us first, she joins in with all those details. Ritu, fill us in.
Well, that's right. The Committee of Creditors meeting, as per Tata Steel's statement, has voted in favor of Tata Steel being identified as the successful resolution applicant to take over Bhushan Steel. Now, the important part of it is the offer really being made for this company, because remember, it has, creditors' claims of over 56,000 crore rupees. So it's a huge amount that we're talking about. What we understand from banking sources is that Tata Steel's offer includes an overall package of roughly about 43,000 crore rupees. Now, within this, it includes payment of 35,200 crore rupees to the financial creditors of Bhushan Steel and about 1,200 crore rupees to operational creditors to settle their dues. In addition to this, there will be some capital infusion in the company, and the Tatas have also offered a 12% equity stake in Bhushan Steel to the lenders, to the bankers, that is, of Bhushan Steel. So roughly, if you look at it, this amounts to about 77% of the principal outstanding debt of Bhushan Steel. That is what Tata Steel's offer is. As as the statement also said, the final clearance now rests with the NCLT.
Okay, Ritu, thank you very much for that. The other stock on our radar today is IGL, or Interpress the Gas. Sonal is here to tell us the reason. Sonal?
Thanks a lot for that, Reema. Well, IGL will be in focus because there is a decrease in VAT in the state of Uttar Pradesh, and gas is used as an input for CNG. And remember, 75% of the revenues for IGL come from CNG. Now, this has led to the reduction in the selling price of CNG by 3.5 rupees, and the prices now stand at around 46 rupees from 49 rupees previously. Also, this gives them the ability to effectively pass on changes in input prices to the customers. Though the stock is not doing well, but going for the analysts, they are very bullish on IGL. They say that the Supreme Court banning the pet coke and fuel in Rajasthan, UP and Haryana will lead to an additional volume demand of around 0.1 to 0.2 MMSCMD. And also they expect 11% volume growth in FY20 for the company. So overall, the sentiment is quite positive for the company.
Okay, all right. Thanks so much for that. So now, well, Reema, there was some green in 2018. The IT stocks, they've come out of nowhere and they've given us some green. We had numbers coming from Accenture as well yesterday. Give us your analysis.
Well, at least today there is some amount of buying interest coming in a weak market for these companies. The sector itself has provided leadership, as you said. So the CNX IT index has rallied 7.5% in 2018 versus the Nifty, which has lost about 5%. So there has been an outperformance to the tune of 12 to 13%. Today, the booster is coming in the form of Accenture's Q2 numbers, where revenue growth has been at 10% on a year-on-year basis in constant currency term. It beats its own guidance, and they've also raised their full-year constant currency guidance to 7 to 9% versus 6 to 8%. But that apart, I think it's just defensive buying, which is coming through once again for the IT sector. Okay, all right, Reema, thanks so much for that. Well, let's hop across to Utkarsh. He's going to tell us the news on 63 Moons. Some bad news coming in there. Utkarsh?
So, Nigel, what we are picking up is that raids are on at this point of time in the office of 63 Moons, also at the residence of Dinesh and Joseph Messing. Now, what we are picking up is in regards to the IPO case, where CBI believes that there has been some stuff and the due diligence was supposed to be done for the IPO was not done. In fact, ex-IPO officials are also in the dock in this case. So this is what we're picking up. We'll get you more details of what we're looking at while the raids are on at this point of time. We'll keep filling you in this.
Okay, thank you, Utkarsh, for that. We'll do a quick recap then of the top stocks that we're tracking at this hour. We've got Tata Steel, IGL, 63 Moons, a lot of IT stocks like HCL Technology, Infosys on our radar. On that note, there is some news which is coming in for MEP Infra. Longchain JV has emerged as a preferred bidder for 3 projects which are worth 2,922 crore. I'm guessing MEP Infra is a part of that JV. Separately today, of course, there is news about the company looking to raise some money via the QIP route. We'll slip into a very short break on that note, but on the other side, the big story today is US imposing sanctions on China. On the other side, we'll tell you what top global voices have made of this move.
And we're at the low point of the day, 9,950, and it's sort of looking very, very good. We're at that mark. We've moved to the low point of the day as well. And good chance to do a quick options check then. The 10,100 put. Remember, those put writers would have believed that we will hold on to that 10,000 odd mark. Now, there the premium has moved to around 157 odd, and there's a clear amount of unwinding that we're seeing. Close to around 12 lakh shares are unwinding their position. That's telling you normally they would be making money if we held on to the 10,000 mark. That's not happened. So now they're saying let's pack our bags, take whatever we're getting and moving out. The 10,000 put, that's the crucial one. You should be looking at that one. If that starts unwinding at a faster clip, then that's telling you that those bulls that were looking to defend the 9,950 to around 10,000, they as well will start packing their bags. Currently, the unwound position is around 3.5 lakh. Keep a close eye on that. If we move to 5-6 lakh, that will tell you that in fact there is more nervousness and the second half of trade could be absolutely, a bad one for the bull. So just keep an eye on that mark. The 10,000 call, well, the bears, they're smelling blood. They believe that, yes, this is our chance to go out there and eat that premium that we're getting. In the morning, remember, the premium was more than 150 rupees odd. So from there, they have, eaten into that premium. And that's why, in fact, that's one of the most active strikes today. They're looking to defend the 10,000, 10,050 to around 10,100 odd mark. And the big talking point really today is the global sell-off. That was triggered by US imposing sanctions on China. Now, in response, China has proposed a list of 128 US products to target. That includes pork, wine, fruit, as well as steel. We have been speaking to some top global voices on what they've made of these moves. Let's listen in.
Well, we think that these measures are actually less aggressive than what we feared, and I think markets feared at that point of time a few days back. There has been a reversal of some of the measures which were taken earlier, so that's positive. Clearly, the levying of tariff on Chinese goods imports is negative, but it looks like to us, while they announced this statement, the U.S. administration official did also mention that we're in the middle of a big negotiation with China. So it's unclear to us at this point of time whether this is a move by the U.S. to then eventually negotiate with China as well, just as they have actually reversed some of the tariff on steel and aluminum, or it's actually going to go further deteriorate from here. At this point of time, we think it is more likely to have a moderate impact on trade and growth.
The announcement today vis-a-vis China, first of all, we're not going to know the products for 15 days. Second of all, there will be an appeals process. There will be an opportunity to negotiate between the U.S. and China. So we don't really know yet exactly how bad this is going to be. The second question, of course, is what is going to be the retaliation? What is the response of other countries? And is that process going to spiral out of control? Look, there's no question this is risky. But in many ways, Trump, his bark has been worse than his bite. And we've seen that again in the announcement today.
I think it does have an impact on volume of global growth, even though it might be modest at this point in time, because, once you start something like this, you put in a degree of uncertainty in global trade and therefore global investment that wasn't there before. And to the extent that you are now putting uncertainty about where things will be going, to that extent, global investment is going to be slower than what you expected before, and therefore it will necessarily have an impact on global trade. And for emerging markets, global trade is the lifeblood of emerging markets. So the impact on emerging markets will be larger than that on developed markets.
Okay, so while tariffs have been imposed on $50 billion worth of imports from China, the actual reduction in imports from China could be just to the tune of $6 billion is what another opinion was coming through, that of Eric Fishwick of CLSA. So that's what, these global experts mean when they said that the bite seems to be less than the bark. But let's find out where India stands in this crossfire between US and China and this trade war, which seems to have started. Hear out our Commerce Minister Suresh Prabhu and his response when we asked him the impact on India.
India is a firm believer in a rule-based, transparent, participatory trading system. And to ensure that it happens, it functions properly, we had invited 53 countries and they have again appreciated India's role into doing that. As we are doing it multilaterally, we also do it bilaterally. We honor all our commitments and we live by the letter, not just letter, by the spirit of it. If any countries take any unilateral action, we'll definitely have taken note of it and we'll deal with it appropriately.
But after this?